Robschild, no investment advice. Welcome to the show where we view the financial markets using Benjamin Graham's investment philosophy, macro technicals, and a touch of crystal ball gazing. Today is Thursday, May 1st, 2025. No monumental news today. That comes out tomorrow with the jobs report for the employment-unemployment rate. But today's episode we begin with continued jobless claims, highest weekly reading since 2021. While the initial jobless claims report that comes out weekly is not staying elevated and going higher and higher, really sort of going sideways still, a metric that sometimes slips under the radar of a lot of people is the continued claims, which also is updated on every Thursday of every week. Today's report of continued claims of insured unemployment rose to the highest that we've seen since November of 2021. It's not enormously higher than, any reading since then. Really since July of 2024, I guess we could say, we've been in a similar range, but we have found a higher high this report today. What it says is that we haven't seen a week of people continuing to claim insured unemployment this high since November of 2021. If we were to see this continue to rise week over week, that would be a humongous alarm bell. That's no longer soft data. That's more like hard data, like, yes, people want work and they can't get it. If you were watching markets at all today, you may have noticed crude oil was continuing to collapse, but it got a bounce apparently off of some news of Trump stating that America will not do any business or ban business with any country that buys crude oil from Iran. So although countries tend to find workarounds, so Iran sends it to one country and then the oil's actually coming from that other country, it still puts a little bit of a stop in the crude oil market, at least temporarily. It's not like crude oil went straight up back above $65 a barrel. As you can see on this chart, before the news came out, we were all the way down to $56.44 a barrel, seeming to not just collapse until that news came out, and then it bounced, all the way up to $58.98 where we are right now. This bounce may have been more short covering than anything, as oil is collapsing and then this news comes out that's saying, oh, hey, there's going to be less oil. Well, you don't want to be short oil if there's potentially any kind of reversal or strength in the price. Moving on to community topics, what moves, if any, did you make today? Robschild almost got to his gold short out of GDXD. Gold literally came today within $1 of my target here. I wanted to see it go, I said specifically below 3,200. A lot of chartists are looking at it getting down to around 3,100, 3,150. I've been seeing the short trade is potentially getting overcrowded, which is why I kind of wanted to get out before everybody else, but I'm not getting out. I want to see it below 200. So I almost exited my gold short today. What moves did you do today? Yeah, so other than that, I just sat on my hands. And comment below whatever moves you did. Coming up, as always, continuous tariff updates. Seems like the White House controls Mr. Market more than any other entity at this point. And then, of course, the most important report of every month comes out tomorrow, Friday, the employment report. If unemployment goes higher than the previous high of 4.2, that will very likely cause panic in markets. And that number comes out tomorrow morning at 8:30 Eastern Time. As always, thank you for watching, subscribing. You can click the subscribe button right over here where my mouse is, commenting and supporting the show. Daily reminders, macro views, and a link in the description of the video. No changes in the crystal ball ratings nor the Robschild portfolio. Diving straight into the charts, we're actually going to start with SMH, the ETF of semiconductors, because semiconductors tend to lead the way for the rest of the stock market. If the semis fail, you better bail. Now, based on my own head and shoulders pattern that dates back to February of 2024, this head and shoulders broke the neckline very recently at the beginning of April, and we've been testing it. And I said, I want to see a closing candle above that retest candle. We were above it today, but we did not close above it. We must have dumped out at the very end of the day, because I swear it was higher when I was looking like just a few minutes before close today. But anyway, we did close actually still below this line. And so on a daily basis, my chart pattern of this head and shoulders stop is still in play. Better chartists than me are seeing this blue line here, this other trend line that I'm going to point out. And they're seeing this as the actual first break to the upside of this line. Where it goes is it's a pretty long one, and it has some major pivot points, so it's a pretty good one. This blue line starts in October of 2022, connects to the bottom of October of 2023, and extends all the way up until what we have today. Basically, we had a close on that candle, on yesterday's candle. At the top of yesterday's candle, we closed on the line, and then today we broke above it. And then so what I'm hearing from other chartists is we want to see a close actually above today's candle to confirm potential further upside in SMH. But as it stands, even my own chart pattern of this head and shoulders top is still not confirmed to the upside. The same chartists that are looking at this line here have a target of 144.65 as a measured move coming down from this trend line. Moving on, SPX, the S&P 500, we went up by 0.63% today. I want to point out that the advanced decline line disagrees with that movement today, as it ticked lower. This adds to the possibility of a down day tomorrow, but really everything is relying on this jobs report. I want to repeat the importance of the fact that the VIX futures curve is still completely inverted in backwardation. We're currently at 24.61. That's above 20. This is still in danger zone. Another alternate fear gauge, the CNN Business Fear and Greed Index, switched to neutral finally. And for me, this is like a good sign to get more bearish actually at this point. As I've said many times in the show, you can't just stay in extreme fear for forever. So maybe this move to neutral will allow us to get back into fear mode. That's what I'm expecting. Next, I want to bring up TLT, my favorite place to be, dropping by 0.87% today. I found it interesting that this dropped along with the MOVE index also dropping today in the same day. That's not really typical. Usually if bonds are going down, you would expect a little more volatility. Instead, it's going the other way. For me, this is a bullish sign in the short term on Treasury bonds. Next, I want to bring up HYG divided by SHI. You can use mathematic equations using multiple ticker symbols on TradingView. I've been using HYG as a pure proxy for trying to see where credit spreads are, because on a day-to-day basis, I don't have that, $10,000 or $100,000 subscription to Bloomberg, whatever it costs, to get that live data on credit spreads. So, my tools are limited, but a better tool than HYG by itself would be HYG divided by SHI, because SHI has a similar duration. It's about 2-year duration compared to about 3-year duration of HYG. SHI being composed of treasury bonds and HYG being composed of junk bonds. And so you can see day-to-day movement a little bit more accurately when you take out the movements of what's going on in the 2-year treasury note. I don't have an update in credit spreads other than they still look like they're in the pattern of continuing to widen here. I mainly wanted to bring up this chart because this is going to be my new way of getting a edge on what's going on with credit spreads a little earlier than the following morning, which is what I've been having to wait for before from the Fred charts. Next, I wanted to mention Bitcoin. We did break to the upside. Professional chartists are still not convinced that this is going to turn into a rally. A lot of people are talking about the $100,000 mark as a pretty high psychological level that could get tagged from here. Bitcoin's price has been coiling up for a while, although in kind of a weird pattern because we had a large green candle followed by rising small candles, which kind of takes the wind out of the potential bullish move, which is exactly what happened. Today's green candle was not enormously big, but big enough to be considered to be officially in a breakout. Bitcoin rising by 2.62% today. Gold was within $1.96 of my target to the downside to exit my short. So I'm still holding that short position, but more importantly than that, chartists better than me are currently still looking to get down to the 3,100 level or the around 2,900 level. A number of shows ago, I've been bringing up SOFR rates and noting at how close we were to the Fed floor. Since then, since Thursday, April 24th, last week actually, we've been rising and rising and rising, and so now money is being deployed. If I had to make a guess where it's being deployed, taking a look at the MOVE index dropping, taking a look at semiconductors not confirming above some of these really important, very strong trend lines. I'm thinking that institutional money may be lining up with what I'm doing, which is, shorting basically equities and going long into treasury bonds. But I don't know. What do I know? I'm just a guy with a crystal ball. Sorry. Look out for that jobs report tomorrow morning. That could be explosive, really big. That's all from me and my crystal ball. Hope you enjoyed. Thank you for watching, and see you tomorrow. Or possibly Saturday. I might not do Friday's show until the weekend. But anyway, Robschild.